What's going on, everyone? I'm your host, Noel. Welcome back to the YouTube channel. In today's video, we got something special going on for you guys. I have my friend, also my lender, Jared Campbell. He is with Fairway. We are going to be talking about the myths in the mortgage world, which one of them being is, do you need 20% down when buying a home? I hear it a lot. I see it a lot on social media as well. And I get asked this question almost every day with buyers that I work with. I can't buy a home because I don't have 20%. So before we get into this interview slash content for you guys, I'm gonna let Jared just introduce himself, explain a little bit about his company, how long he's been in the business, and anything else he would like to share. Go ahead, Jared.
Well, thank you so much, Noel, for the introduction. And I truly appreciate the opportunity to talk on your YouTube channel. My name is Jared Campbell. Like you mentioned before, I'm a loan officer with Fairway Independent Mortgage Corporation over the past year. Thankfully, I have joined a wonderful team, the Kutu Mortgage Group, that really gives me the opportunity to answer any questions that I may have, and he'll really expedite my learning process with the mortgage industry. And I'm here to answer any questions Noel has in regards to the 20% down, as well as just educate you on the purchasing process, as well as the different loan options that are out there.
Thank you for that, Jared. As we both know, you and I, the real estate world and mortgage world is changing constantly. Whether it's every day, a new virus comes out, rates go up, rates go down, sellers market, buyers market is just changing a lot. So let's get straight right into it. The first question I know I hear so much is, do you need 20%? Is that a requirement when buying a home?
Absolutely not. Every single loan product that is available conventional wise, FHA or VA, requires a minimum of 3.5% down for FHA, 5% down for conventional, and 0% down for VA. That being said, just because it's 3.5% down, 5%, or 0%, you're still required to pay closing costs in addition to that down payment. In the past, you could get credits from the sellers just because they wanted to get rid of their home. It was sitting for a while, etc. But then this market, you are required to pay closing costs and down payment of whatever you decide to move forward with.
Sounds good. Sounds good. Yeah, because I get that asked a lot. Noel, I want to buy a home, but I don't have 20 grand. 20% down to put. And I do try to educate my buyers that you don't need it. Like, you hit it on the head. If you're going FHA, it's 3.5 in today's market. What the rates are, how it's going. Conventional 5%. And 5 to 10, I'm gonna say, depending on lenders, because I heard lenders have done 10%. I know you guys have done 5%. So your lenders does matter. Just a side keynote on that, who you use does matter as well. And going back to VA loans, as far as 0%. Now, this was a question I just recently got asked. That's why I wanted to put this in here, because I know what to say, but I still wanted to make sure you could touch on this topic for me. So someone asked me, when buying a property with the association, typically a townhome or a condo, and if they don't have reserves, one, what do they mean by reserves? And two, does that matter for the buyer or lender when it comes down to what you have to put down for, in most cases here in Florida, a condo, let's say? A lot of homes here in South Florida, as condo wise, don't really allow FHA. I believe there's only like 8 last year when I was with Remax. That was that magic number, 8 condo associations that do allow it in South Florida. Now that's like almost none at this point, mainly conventional. So if there's no reserves and you got a clearance of 10% down payment for your conventional loan, let's say, but you have to put 20% down, how does that work with you using a conventional loan and with reserves buying a condo?
So the most important thing, like you mentioned, is the budget when it comes to the condo. There's another thing that also popped up recently due to the Surfside situation, and is the 40-year certificate. So 2 things you always want to be aware of when purchasing a condo. First and foremost is to receive the budget. The budget needs to have a minimum of 10% from the HOA fees to go towards reserves. If it's 9% or less, you are required under a conventional loan to put 25% down in order to move forward. If it meets that 10% requirement or higher, you can put as little as 3 to 5% down. 3% is very difficult just because you have to have significant amount of reserves personally, a great credit score, et cetera. So I always tell people 5%. And then when it comes to townhouses, it's going to be based off of how it's labeled for the legal description. So if the legal description comes in as a townhouse, then most likely you will not have to have reserve requirements. If it is listed as a condo, meaning even if the structure looks like a townhouse, it still can be set up as a condo, then you will have to get the budget. You'll have to go through the HOA application process, as well as, make sure it meets that 40-year certificate.
Gotcha. Now I know single family homes are different. That's the most thing people want here in South Florida. Single family home, no HOA or any type of association connected.
That's not true. I mean, so there are some single family homes in a community with an HOA. Their policies are always, random. I mean, it's just depending on what they require, because even, like one of the deals that we worked with, about at the beginning was the senior 55 and older community where they had a credit score requirement. So those are always things you want to look up ahead of time before getting your buyer into a situation where they're out an inspection fee, they're out an appraisal fee, and then they don't have the 25% down, or they didn't have the credit score needed to get into that facility. So it's extremely important to work with a qualified and knowledgeable loan officer as well as a real estate agent to be able to go through those pitfalls ahead of time.
Perfect. Now, I personally know there's a lot of pros to adding 20% down. Some people's situation who I've been helping out throughout this year, I've been fortunate to close all my deals cash. I think I only did 2 buys, which was FHA, but all my other deals was cash. Now, PMI, let's touch on that real quick. 20% down, the rule of thumb from what people think is if you put 20% or more, you don't have to pay a PMI. Is that true? Like we discussed yesterday, let's say instead of putting I get FHA approved 3.5%, you tell me, but I want to put 10% instead of the 3.5, which is still not bad. But is there any pros to that? Do I get the same benefits as if I'm putting 20% instead of 3.5 or 10%?
So when it comes to FHA, you're stuck with the mortgage insurance regardless. It's part of the security that comes with an FHA loan. So unfortunately, if you put 5, 10, 15% down, you're still going to be hit with that mortgage insurance. Conventional loans, on the other hand, are 20% down or more. You do not have to pay the mortgage insurance. If you put less than 20% down, the more you put down above 5%, the lower your percentage is for your mortgage insurance. Another thing you can also look into is called a single premium mortgage insurance payment. That being said, if you wanted to put, say, 15% down, and you could pay maybe $2,000 to $3,000 at closing, and you will not have to pay mortgage insurance. So that being said, we always do the math for our buyers and say, hey, if you're already looking to put 10 or 15% down, you, instead of paying the mortgage insurance, this is what the cost would be, and this is what your savings would be over that 6 or 7 years. Right. The only way to remove the mortgage insurance after you've closed the loan is getting to a 78% loan to value. So simple math, $100,000 property, you put 5% down, that's $95,000. When that principal gets to $78,000, you will no longer have to pay mortgage insurance. That being said, you could always make extra payments towards your principal throughout the years to really try to get to that at a quicker pace. So those are basic, knowledge when it comes to mortgage insurance. FHA, you're automatically required to have it. And conventional, it's 20% down. And VA, you could put 0% down with no mortgage insurance. So by far, VA is the best loan program on the market, period.
VA at the moment. At the moment. So for those who don't really know what a VA loan is, that's pretty much pertains more to veterans, people who have served their country. There are stipulations to it, especially in today's market. It is a little bit tricky. I had the luxury of somewhat helping out with a VA loan that I try to have Jared help me out with as well. And it didn't go through as we expected, like we wanted to, but it is a learning curve. When it comes to VA loans, you need to have a knowledgeable realtor, I'm going to say, to help you out, because a lot of realtors just think it's zero down. I have heard realtors myself say it's zero down. The seller will give some credit to you at closing, and in today's market, that's really not the case that's going on. If you happen to have it, like I was fortunate enough to meet a realtor that had a buyer that needed to sell, so was willing to do whatever at that time when we were somewhat under contract. But at least my buyers knew also the type of market and what our odds were stacked up against us. And she was a big believer in helping in veterans because her whole family comes from a background. She knows how hard is it in today's market, at least, which is being a seller's market. So it's very difficult when you're using a VA loan. But once again, VAs are mainly for veterans, people who serve the country. For us, that's not for everybody. You could just go and call Jared and say, hey, I would like a VA loan. If that was the case, everybody be buying a house every day.
Correct.
It'll be that simple. Now, touching up on putting extra money down when buying a home, we both know that's a good thing, but is it kind of like buying a car? So how the rule of thumb is when buying a car, I believe, is for every $1,000 you put is like $10 off or
$5.
$100. Yeah, something like that. I forgot. Is that the same way as buying a home? The more you put down, the less your monthly payments is going to be.
100%. Yes. So, I mean, it's simple math, every 1,000 is $5. So obviously you're borrowing money in today's market at a very, very low interest rate, anywhere from 4% to 3%, depending on your credit score, as well as, your down payment, et cetera. So, for an extra $30, $40, I mean, is it really worth it at the end of the day? May or may not be. You could probably grow that money in a secondary market on a much faster pace over the period of time. But if you definitely, have the money to do so and you want to add an extra 5 or 10% down to your initial down payment, you obviously, move forward with it in that manner, because it will save you on two aspects. Your mortgage insurance will be a little bit less, and the possibilities of getting a little better interest rate could happen as well.
Sounds good. Sounds good. And I know the New Year's about to kick in. We're about 3 days to the New Year. So I'm assuming a lot of people goes hopefully this year to become home buyers or get into investment properties. You see me on social media. I'm big on investing. That's my go-to, and also trying to help a lot of buyers out. Stop renting. I always say it numerous of times. My last deal, I closed 2 months with the buyer. I rented 3-2 here in Coral Springs, 2,100. My buyer, I closed half a duplex in Palm Beach for 4-2 for 1,500. Like, he's saving $600 less than I am. But to prepare people for the new year for 2022 who's looking to buy, I was actually going to do this one part, but I want to do this kind of two part. For somebody who wants to become a home buyer for the first time, give 3 tips you could recommend for them to start now, preparing themselves for the next 6 to 12 months, and then touch on the investment side, because people think you could just automatically use an FHA loan, put 3.5%, and that's for investment purchase. And it's the same process a little bit when buying. So what would be 3 tips for at least buying to prepare them now to later? And then 1 or 2 tips you could touch on whoever wants to become an investor or start the investment process.
Absolutely. So the 3 tips obviously are what you need to qualify for a mortgage. First, credit score. So your credit score needs to be a minimum of 580 or above for an FHA loan. And to get a decent interest rate for a conventional, you need to be about 700 and above. Secondly is your income. You need to have a minimum of 2 years either at the same job or in the same field in order to have qualified income. That being said, I've done the math in the past. So if you earn $60,000 a year with $500 a month of liabilities, meaning car payment, credit card payment, student loans, etc., totaling 500, you can afford about a $260,000 property.
That's
And then
per person, correct?
that's a combined income, however you want to
Okay.
call it. Combined income, if it's one person, two people, etc. So it's combined income. And then 80,000 gets you something in the 300 range. And then 100,000 will get you something in the 450 to 500 range.
Got it.
So, the biggest issue with first-time home buyers is the down payment and the closing cost. So they have the job, they have the credit score, but they're not aware of actually how much it costs to put down. And I know something you asked me right at the beginning is can I give them a percentage of what the approximate closing cost would be?
Mhm.
It's going to be, obviously the higher the property, it's not going to have the same percentage, but in that $350,000 range, you're looking about 3%. So it's about $10,000 to $12,000 for closing costs, and then your down payment, whatever you decide. FHA is 3.5%, which would be $10,500 for a $300,000 property. 5% would be 15 plus that 10 or 12,000. So roughly speaking, you're going to need about $30,000 in the bank or a gift or access to it through a retirement fund in order to move forward and get a pre-approval so you can even start looking for a property. So those are my 3 tips: income, credit, and down payments. So those are the 3 things that we have to utilize to qualify you for a mortgage.
Now, just to touch on one thing before we go to investment side real quick. I know you said in work history, at least 2 years, and I use this analogy to kind of help people just make sure I'm kind of saying this correct too. I'm a manager for McDonald's. I worked for a year straight. I decided to leave McDonald's, but go into management in Burger King. Does that still qualify as the same position for 2 years?
100%.
Now, if I'm a manager for McDonald's for 1 year, but decides to be a car repairman for AutoZone for 6 months, and then a pilot for an airline 6 months later after, that doesn't qualify for a loan because it's not consistent for 2 years.
No chance.
All right. So just to make
and then the other
understand.
side of and then a lot of people have a second job. So in order to solidify the second job income, you're going to need 2 consecutive years, because we want you to prove to us that you can hold 2 jobs for 2 consecutive years. It's not 30 days, 3 months, 6 months. It needs to be 2 years. And then when it comes to self-employed borrowers, it's also 2 years of tax returns, and it's what you claim as income. It's your net income. It's not your gross. So we get a lot of times somebody made $150,000 with gross income, and then they write everything they possibly can and only make $30,000. So yeah, we understand you made significantly more than $30,000 that year, but we can only utilize $30,000 because that's what you're paying taxes on. So self-employed borrowers, it's always important to, if you could, meet with a lender, speak to them before you file your taxes so they can identify the right amount of money you would need to claim in order to make sure you qualify for a mortgage.
Gotcha. That's good to know too. I just learned something about that. I always wonder how that worked for me personally, because this year it was one of my best years, I'm gonna say. So that's something we're definitely gonna have to talk about on topic.
Right. It's what you claim.
Yeah.
It's not what you make. And because at the end of the day, you're self-employed, and we want to make sure you're paying taxes on that income to be able to verify it. And if you've been in business for 5 years, we only need 1 year tax return.
Okay. Good to know. Now, investment side, touch on that real quick because I get this a lot. I'm looking for a property, $200,000. I want to use FHA, put 3.5% down, put like $30,000 in it, fix it up, flip it, the whole 9 yard. The typical stuff we hear every day. How does it work with obtaining a loan and using for investment? Do you have to put 20 to 30% now since it's not a primary residence and it's more for investment wise, or it's still the same rules as applying as a first-time home buyer? You could apply that 3.5% for investment purchase wise.
So to answer your first question, absolutely not. FHA is 100% only for primary residence.
Good.
Okay. The only time you can utilize it for possibly an investment, property is a duplex, triplex, or quadruplex. So if you were to wanted to buy a duplex and you wanted to move forward with an FHA loan and you wanted to live in one half and rent out the other half, that's an investment property. It's called house hacking.
House hacking, correct.
So it's something that I highly recommend. It's 3.5% down compared to 15 or 25% down if you were going conventional on a duplex or triplex. So it gets you started. And then if you move out of there in a year or 2 years or something like that, you're still going to have an FHA loan on it. But you do need to move into that property in order to utilize an FHA loan. The other investment side of things, like I mentioned, is you could be required to put 15 to 25% down, depending on what loan program you go with. We have this unbelievable loan program. It's a broker loan that we utilize for a lot of individuals because it has one less kink in the process where you do not have to have qualified income in order to move forward with it. Your interest rates are a little bit higher. Your down payment is 25%. But as long as the property appraises, as well as the rent schedule comes in, meaning they do an approximate rent for that property higher than the mortgage payment, you can move forward with a loan without having qualified income, as long as you have 25% down, good credit, 700 or above, and the property appraises in the right manner. It's a great program for people to get started because you may only make 60,000, 70,000 a year, but you also, the other side is you have to have a primary resident as well. But if you make 60,000 and you saved a bunch of money and you want to go buy a small investment property, this is a good opportunity for you.
Yeah, like you said, house hacking, I'm a firm believer in that. I tell a lot of young guys that always come up to me about investing because they see that's like one of the key to financial wealth. And I always tell that to a lot of young people: you're young, you have no wife or kids, get into investment, buy a home, and rent out the other rooms. House hack, or start with a duplex, triplex. Obviously, you and I both know you have to do your due diligence. You got to know how much is your net operating, what's your ROI, etc. It's a lot that goes into it than just buying a property and renting it out, because I tell people you don't want to break even or just make $100 a month. That's really not good cash flow. You have to understand how cash flow works. I've always lived by the rule is 500 or more. That's awesome cash flow. If you consider $50 or $100 extra in your pocket cash flow, I see that as a bad investment, but to each his own at the end of the day. That's
Correct.
how I see it as. And you did say one thing that I didn't put here, but I want to touch up before I wrap this up, because I don't want to like prolong this, because those were the main questions a lot of people asked for. FHA programs. I know a lot of people say that a lot. I want to get into FHA program, and I tell them FHA is not a program. That's what it's called for loans, and it's not a first-time home buyer loan. I don't know why people think that, and I understand why, but it's just a common thing that's gets thrown around. Programs. Shine a little bit on how the programs works. I know the last deal me and you almost had, when we talked about it with Dennis, the one that helped out the duplex, he didn't qualify for it, even though his lender told him at the time he did, and he was way over the debt value at that time. I know from my knowledge here in Florida, Broward has a lot. Palm Beach didn't have a lot at that time, and Miami had none going on for them. So kind of touch on like, how does it work like a little bit with these first-time home buyer programs to help out with down payment assistance and things like that?
Absolutely. So like you mentioned, Broward County does offer probably the most down payment assistance programs in the state of Florida. And then you also have individual cities as well. So, North Lauderdale, Pompano, Hollandale, just to name a few, have their own individual programs. That being said, there's a lot of caveats to it. There's income limitation, there's purchase price limitations, as well as you have to have the loan as a secondary lien, which increases your interest rate as well. But that being said, for instance, Broward County offers up to $40,000 for first-time home buyers, as long as you meet the criteria. And first-time home buyers, in their eyes, is never purchasing a home in your life or not owning a property for 3 years. So if you go through that program and you qualify based off of your income, credit score, and down payment, because you still have to come out of pocket some money, then you could get up to $40,000 in Broward County for select cities. You can use that money to help with the closing costs, differentials, and the price. So say you qualify for 200 and you find something for 220, that 40,000 can be utilized for that gap between the 200 and 220. Then the closing cost and any additional down payment is needed. So that's kind of, it's more of a what is available type of situation.
Right.
It's very, so if you are a first-time home buyer or meet that criteria and not own a home for 3 years, and you see something online, or you get something in the mail, or you're just doing some research, just reach out to a lender and or that city. It's extremely important to reach out to whoever is hosting that program, to make sure A, they still have funds available, and then B, what guidelines they have set, because they want to you may have to go through their application process as well as our application process. And if you are looking, I mean, based off of my knowledge, the best program currently in Broward County is out of Hollandale Beach. They offer up to $80,000. You're only required to come out of pocket $2,000. And once you have that property for 10 years, that loan is 100% forgiven. So yeah, you may pay a higher interest rate, but you could get $60,000, $70,000 towards your property, which is an additional assets to you immediately.
Nice. That's amazing. Well, yeah, this was a lot of value news. I learned something new every day. I hope this video helps a lot of people out, whoever sees this video. This was actually fun. I'm gonna try to be doing more stuff like this with Jared, and also bring other people from his office or anybody he could recommend to help build. That's what this is about, just helping everybody become more knowledgeable, not just real estate. If you're a newer agent or an older agent who wants to improve on lead generating or just want to know what's going on in the market. Jared, I'm going to put all your information description below, but
Perfect.
Feel free to plug yourself. You can leave your number here, guys. Once again, this is only South Florida. We work in South Florida. He does cover from anywhere in Florida in general. Same thing with my real estate license. If you're in New York and you've seen this, obviously some of the rules and regulations may be a little different, but for most standard part, correct me if I'm wrong, everybody goes through the same process, which is Fannie Mae, Freddie Mac, like the same website. That's where all lenders go to get
correct
the approval process started. So take some of the
guidelines are the same guidelines.
Exactly.
There are state guidelines when it comes to condos and townhouses and different types of properties, but the pre-approval process is going to be the same in all 50 states.
So there you go, guys. So you can always reach out to him, even if you're in New York. I'm pretty sure he has friends he could connect you with out there if he knows anybody. Same here for me. We just know a lot of people because people like us. They love how we
correct
our reputation precedes us. There's something more I can say about it. But leave your phone number, best email. Like I said, I'll put your social media and all that below. But feel free to plug yourself now. And yeah, we end it off from there.
Well, yeah, it's Jared Campbell. I am Loans by Campbell. I have my own YouTube channel, and I'm going to be doing a variety of videos here in the new year, interviewing appraisers, insurance individuals, inspectors, jumbo loans, how the market works, etc. So keep an eye on it. Subscribe to my channel, Loans by Campbell, and get yourself the knowledge you need to purchase that property.
Yeah, so like I said, I'll leave all his social media, YouTube. I'll leave his email there. I wouldn't put his phone number. If you want his phone number, you can find it. We all know there's crazy people out in this world, even though information is public, excuse me. But yeah, hope you guys enjoyed this video. Thank you, Jared. If you guys are new, like, subscribe, comment. Let me know what your thoughts. If you have any questions, Jared could comment on my behalf, or I could comment for Jared if any question you guys have. And we'll see you on the next one.
Thank you.
Thank you.